most countries, you know, dropping down their size.
I'd like to welcome our newcomers to this session. A number of you students have not been here for the earlier segments, but we appreciate your joining us for this very important keynote address. We are pleased to have as our morning keynote speaker Mr. Gene Dodaro, who serves as the Acting Comptroller General and Head of the United States Government Accountability Office. The GAO is an independent, nonpartisan agency that works for Congress. Often called the Congressional Watchdog, GAO investigates how the federal government spends taxpayer revenues. In short, they work on behalf of all American citizens in ensuring that Congress and the federal government are appropriate stewards of our tax dollars. The head of GAO, the Comptroller General of the United States, is appointed to a 15-year term by the President from a slate of candidates that Congress proposes. Gene L. Dodaro became Acting Comptroller General of the United States on March 13, 2008, succeeding David M. Walker, who appointed him upon resigning. Mr. Dodaro has 30 years' experience at the GAO, which in itself is quite an accomplishment. Throughout his career, he has served in numerous executive positions, including Chief Operating Officer, the #2 leadership position in the organization, prior to being named Comptroller General. In his various roles, he has been recognized countless times for his professional contributions and achievements. Recently, Mr. Dodaro has testified before Congress on a number of urgent national issues, including the TARP bank bailout plan, federal assistance to the auto industry, and the need to upgrade the U.S. financial regulatory system. Through the American Recovery and Reinvestment Act, the GAO is tasked with a range of responsibilities to help promote accountability and transparency and to ensure that the funds are used as specified. With recent events and major downturns in our global economy, when we consider that which is taking place in our own country, it is particularly meaningful to have Mr. Dodaro here with us in Auburn today. I also want to recognize his wife Joan sitting in the back of the room, and Joan, thank you for being here with us. Please join me in extending a very warm Auburn welcome to Gene Dodaro, Acting Comptroller General and Head of the U.S. Government Accountability Office.
Thank you very much, June, for the kind introduction. I'm very pleased to be here today to talk with all of you about some very important issues. You've been spending a great deal of the morning talking about many of them, but I'll talk about it from a different perspective in terms of our role. I also would like to thank June and Sydney and others here for their gracious hospitality here. Made my wife and I feel very welcome, and we appreciate that. What I'd like to cover with you today, and I'll leave plenty of time for questions, a little bit more about the GAO, what we do, and how we serve the Congress and the country. But I want to spend most of the time talking about the financial markets and the economic recovery efforts that have gone underway. These are very important initiatives to all of us. I'll talk about the work that we've done and what we're planning to do. Also, we've had a transition to a new president and a new Congress. It's been a very unusual transition period and a challenging period. We've got 2 wars going on in Iraq and Afghanistan. We've had economic turmoil in the markets. We've had a number of other challenges, and there's a special role that we at GAO, even though we work for the Congress and the legislative branch, play during the transition to a new president. And I want to talk to you about how we exercise that responsibility to try to provide help during this very challenging transition period. And then we've had some long-term structural problems at the federal government with our financial situation before recent events have occurred in the financial markets and with this recent economic slowdown. Those problems will still be there when we recover from this effort, and I want to talk to you about the scope and magnitude of those problems, and the issues that we believe need to be addressed to put federal government on a much more prudent and sustainable fiscal path long term. First, a little bit about the GAO. We are in the legislative branch of government as an independent agency. We serve the Congress to help them carry out their constitutional responsibilities. This includes helping appropriate taxpayer dollars, passing laws, holding oversight hearings to make sure that the laws that are passed are carried out effectively and efficiently. We have about 3,200 people in GAO. We are a multidisciplinary organization. We have accountants, we have financial auditors, we have lawyers, we have economists, public policy analysts, computer scientists, actuary, whatever we need in order to carry out our responsibilities. We work in teams. Most of our projects require people that have subject area expertise in, say, for example, financial markets, healthcare, education, and then we combine that with people who have technical disciplines and economics, law, etc. And we form those interdisciplinary teams. We issue hundreds of reports and testimonies before the Congress. Last year we testified before the Congress over 300 times. We do work for virtually every standing committee of the Congress and about 80% of the subcommittees. We work on the full spectrum of the federal government's responsibilities, and rooted in the Constitution, the government's role as embodied by this first bullet is to promote economic security and well-being of the American people. So we work on all issues relevant to that: healthcare, education, transportation, public safety, etc. And also to protect and safeguard our country from threats. And certainly, we've done a lot of work on counterterrorism activities. I'll talk a little bit about our work in Iraq, Afghanistan, and Pakistan a little bit later. But in terms of national defense, we spend a lot of our time looking at our military readiness and spending, and also the challenges of operating in a global capital markets in a increasingly interconnected world, as we've seen recently with financial markets, but also with healthcare issues and many other aspects of the federal government's involvement. People often ask me how we can operate in such a professional, objective, nonpartisan manner in Washington year after year. It's because we adhere to certain professional standards that we issue, and we carry out all our responsibilities that way, but we also have an important set of core values. Accountability is what we do. We try to help the Congress ensure the accountability of the executive branch to the legislative branch, and we also help ensure accountability of the federal government to the American people. And integrity is how we do it in a nonpartisan, professional, objective manner, and we'll reliably produce our reports that are candid, clear, and constructive. We issue, several hundreds, probably close to anywhere from 1,500 to 2,000 recommendations each year to the executive branch agencies. About 83% of our recommendations are adopted within a 4-year period of time. So we have a pretty good success rate there, and a lot of benefits emanate from that, both in financial savings, but also important improvements in public service and government operations. Recently, we've been focused a lot on the financial regulatory system. We launched an effort shortly after I became active Comptroller General to look at what some of the challenges were to the regulatory system and how to make that system better to make sure that we don't have any future circumstances like the current ones that we're trying to deal with. We've also been involved in the financial rescue effort. I'll talk about our role that was given to us in the Economic Stabilization Act that created the Troubled Asset Relief Program and how we're carrying out those responsibilities. I would also mention here briefly up front, we're also the auditors for the Federal Deposit Insurance Corporation that's set up with the Bank Insurance Fund. Last year, we had about 20 banks fail in the country. This year, an equivalent number have already failed. This is the organization that then takes over those banks and to try to provide the insurance that everybody has to their deposits that in these funds. These are more banks that have failed since the early 1990s in the savings and loan crisis. We were involved in that effort when the Resolution Trust Corporation was set up, and changes were made to better capitalize the bank insurance fund. Right now, that fund has been depleted, and they're in the process of trying to recapitalize it over a period of time, although it's difficult when you have an economic downturn. The federal FHFA stands for the Federal Housing Finance Administration. This is the organization that was recently created to oversee and regulate Fannie Mae and Freddie Mac, which create the secondary market for mortgages in our country. We had long called for reform in this area. We were given the responsibilities to be the auditor of the Federal Housing Finance Administration. Of course, that administration right now is a conservator of those two entities, as the federal government has taken over responsibility for managing those entities under this conservatorship right now. We're also working to develop options for the Congress to consider about the ultimate status of Freddie Mac and Fannie Mae when they emerge from this conservatorship, in terms of looking at the spectrum of options from privatization to government control. They had this sort of special status beforehand where they operated largely as private enterprises, but with an implicit federal government guarantee of their debt. I don't think very many people think that that status, would be the best option going forward, but we're looking at all options right now. The Troubled Asset Relief Program, the TAR program, I'll talk about in a minute. But I'd also point out that we're the auditor for the consolidated financial statements of the federal government. Most people don't know that the federal government is the last sector of our economy to have regular financial audits prepared and have them subject to audit. The first ever financial audit of the federal government's financial statements was conducted in 1997, well over many years after we were created. Even though the federal government required state and local governments to receive financial audits to receive federal aid, and of course financial audits have been required since the stock market crash for publicly traded private organizations. I'll talk a little bit about the American Recovery and Reinvestment Act, and that's the stimulus legislation that was just passed in February. First, let me talk a little bit about the financial regulatory framework. What we decided to do was to sort of, as a primer and preparation for the need to make changes to make sure that we didn't get ourselves in this predicament again, trace the evolution of our financial regulatory system that was put in place in order to make sure that there were safeguards in the financial markets and financial institutions. Trace that over the 150 years in which it was created. It was largely created as a result of prior crises in our nation, largely after the Great Depression. There were some changes over the Federal Reserve that had been created many years earlier to manage monetary policy. We wanted to also figure out what has changed in the market over the last 20, 25 years that have outpaced the ability of the financial regulators to carry out their activities. And then we outlined a framework for Congress to consider in crafting or evaluating legislative proposals to change that system. Now, bottom line is we concluded that the regulatory system that we have right now is outdated, it's fragmented, and it's ill-suited to meet the needs of our country in the 21st century. Three main trends that we point out is that the financial regulators have struggled and often failed to mitigate the systemic risk posed by some of these large financial conglomerates that have developed over the last 25 years, and also ensure that they regulated the risk themselves for their specific entities. As was pointed out this morning, there's some legislative proposals that are already being considered now, but what we outline here is that there is not one financial regulator that's charged with monitoring systemic risk across the organization. What's happened as large financial conglomerates have gotten into banking, securities, and insurance practices, the financial regulators are still largely aligned on a functional basis. And so neither the regulators have an entire picture over some of these large financial conglomerates in terms of monitoring the risk, and some of the risk management practices that are in place did not obviously work well or as intended. Also, a number of less regulated entities began to emerge over the past few years. Non-bank mortgage lenders, for example, hedge funds, and also credit rating agencies took on greater importance over this period of time. And so there needs to be a systematic look at how, given the development of those entities, how regulation should proceed to protect investors and consumers. And you've had an emergence of a lot of new and complex products. We're talking about collateralized debt obligations, over-the-counter derivatives, credit default swaps. All these rather intricate products have emerged over time, and many of them were a lot less regulated as well. So we had a lot of gaps in the system that had occurred over the last 20, 25 years. These are the 9 elements that we put in advance for considering legislative reform. I'm not going to go through all 3, and I'd be happy to elaborate on them later during the Q&A period, but I just emphasize a few basic tenets here. Number 1, our view is that the regulatory system needed to be addressed clearly in statute. The goals of the regulators needed to be clearly spelled out so that they could be held accountable over time for carrying out their responsibilities, and that needed to be comprehensive. A lot of these entities that weren't being covered, or these complex products, needed to be addressed in order to better protect the system. Someone needed to be designated, needs to be designated to monitor systemic risk. Now, all this is to say that while there needs to be a fine-tuning and a revamping of our system and modernizing it going forward, it can't be to the point where it stifles innovation, capital formation, and risk. We need to find a proper balance that allows for creativity and innovation in our markets, but yet monitors more proactively the risks that may be emerging from some of those developments, and to deal with it in a timely fashion. Also, the system needs to be have regulators that have clear authority, that they're resourced properly, have the ability to be able to monitor the system and take action as appropriate, and they need to be funded in a way that provides and preserves their integrity and preserves their independence going forward. Also, the issue of consumer investor protection is one that we've consistently noticed, whether we're looking and been asked to look at credit card disclosures, mutual fund disclosures. Invariably, we find that the disclosures aren't clear enough and that there's not a level of understanding involved here. And along with providing protections for consumers and investors, there needs to be major initiative in this country to help elevate financial literacy. There's actually a commission that is comprised of a number of federal agencies, but we've studied that commission in the past and found they didn't have a good strategic plan. They weren't well resourced, and they weren't as effective as they need to be going forward. And finally, there needs to be a way in modernizing the system to protect the taxpayers from risk. Right now, the way the bank insurance fund is set up, the banks pay into that fund, and then if banks fail, the amount of activity to liquidate those banks or sell them or work through their problems is borne by that fund and paid by the institutions that's regulated. And that principle needs to be looked at going forward. So if there are future problems and risks that emerge in the system that require extraordinary support, that support should be borne by the financial markets and institutions and not disproportionately by taxpayers. So those are our principles. Now, under the Economic Stabilization Act was created in October. This is the $700 billion bank bailout, shorthand for it, I'm sure you've been reading about in the papers. When this legislation was being developed, we, part of the GAO, offered to play a role in providing accountability. The law gives a great deal of authority to the Secretary of Treasury to intervene, to use this money to purchase assets or to ensure activities in order to stabilize the financial system in the country. And so what we thought, given the amount of authority that was granted and also the unprecedented amount of money that was available here, that there needed to be some accountability measures put in to the legislation. Now, our oversight role is twofold. We were asked by the Congress to report every 60 days on how Treasury was carrying out its responsibilities, and also to provide a financial audit of the expenditures of the fund. We've issued 3 reports so far since the program is 6 months along, one in December, January, and just last week on March 31st. Now, basically, we've made a series of recommendations in these reports to improve the transparency, accountability, and integrity of this program. They've fallen into 3 basic categories. First was making sure that Treasury had a better process to monitor and have reporting back from the financial institutions on how the delivery of funds to them through the capital purchase program had affected their lending activities. The idea was to provide them more money that would then provide additional lending to increase the credit markets and to increase liquidity. Of course, this happened at the beginning of the economic downturn, and so there was economic difficulties going forward. But initially, Treasury blocked at having any reporting back, and so we continued to press forward, and then they have begun collecting lending activity for the 20 largest institutions receiving the money. We said that wasn't enough. All institutions receiving the money should be provided reports back to monitor on a more frequent basis, and they've recently agreed to do that going forward. Another theme of our recommendations is you needed a better communication strategy on the part of Treasury. This program from the outset has been plagued by poor communications. Initially, it was to purchase troubled assets, but within a few weeks, they went a different route and decided to make capital injections in the program, into the banks rather, and the explanation for that change wasn't effectively communicated either in Congress or with other stakeholders in the markets. We've made recommendations. Treasury has made a lot of improvements in this. I was pleased last month to see the announcement of the Financial Stability Plan in February, the home ownership program, this recent effort to have a public-private partnership to now purchase some of these loans and securities that are particularly problematic. But there's a lot more details that need to be worked through and announced. And because there's about 12 different programs or activities under the Troubled Asset Relief Program right now, that places a premium on communication to Congress, to the public, and to the markets. And so that we recently made additional recommendations to improve the communication of this program. For example, right now, of the $700 billion as of the end of March when we issued the report, most people, if you ask most Americans, they think all that money had been spent already. It was only about 303 billion of it was distributed at the end of March. About 199 billion went for the capital purchases in banks, but all the money hasn't been allocated yet. In fact, there are 532 institutions, financial institutions, have received the money from the Treasury Department. Treasury is still evaluating applications from 1,190 institutions, and there are another 750 financial institutions that have applied to their regulators where they're waiting for a recommendation from the regulator to go to Treasury to make the ultimate decision. So there's still a lot of money that's available to be allocated, and many of these programs are yet to be implemented and have the resulting desired effect. And then we've made a wide range of other recommendations to improve Treasury. They basically had to stand up a program that was non-existent with the Office of Financial Stability, so they had to hire people, manage contractors, etc. So we have a series of recommendations to help put them in a better position to manage this program. Another part of the communication issue here, we made a recommendation recently on this, is that there are dividend payments coming in already. The Treasury's received $2.9 billion back dividend payments because the capital was given in exchange for senior preferred shares of stock. So the government is recouping some of these funds as well, but it's important for people to understand how the program works. Now, one of the other things that we do at the GAO, obviously this situation in terms of the financial market turmoil in our country has affected many other countries around the world. We're part of an organization of 189 countries that have national audit offices, or the GAO equivalent, if you will, in their country. And we work collectively for many decades on developing standards for auditing, accounting, internal controls, etc. And we have a governing board part of this organization. In November, the governing board announced that they would like to create a task force to work on some common issues, and I agreed to lead the task force. These are the number of countries that have already engaged in it. And so we're going to look, and what we're going to do here is compare and contrast our situations in our various countries. We're also going to talk about the role of international organizations, such as the International Monetary Fund, the World Bank, and others, to help deal with some of these issues, but share best practices. It's a very good way to understand the global dimensions of the financial situation. And indeed, as you've seen, the President and other leaders in the executive branch are conferring with world leaders around the country and finance ministers to try to deal with some of these situations. So we'll be doing our part from an audit and an independent review standpoint as well. Let me switch now to the American Recovery and Reinvestment Act. This is the stimulus bill that was passed in February. It has a number of objectives: preserve and create jobs, to help stabilize state and local government budgets, but also to make investments in infrastructure, in the energy area, broadband communications, and transportation infrastructure as well. So it has multiple objectives. It's estimated to be at $787 billion. Of that, $500 billion is in direct federal government spending. About 280 of that will flow through states and localities. The other money will go directly through loans or other things directly to localities or to businesses through contracts part of the federal government. The remaining money, the $287 billion, is in tax relief or tax credits that will be carried out over the next few months and the year or so. The Act has several accountability features built into it. The inspectors general, each major department agency of the federal government has an inspector general that provides oversight over that department. The inspector generals are in the executive branch, unlike the GAO, as I mentioned, in the legislative branch. There's also a new board that was set up on the Recovery, Accountability, and Transparency Board. They are to monitor the website activity. Now, the one really, I think, revolutionary feature of this program is the amount of transparency that was built into it. There's recovery.gov is the website that's available for people to go to find out how much of the money's been spent, where the money's been spent and allocated. This degree of transparency is meant to empower citizens across the country to ask questions of their leaders about the funds. The inspectors general have to follow up on every allegation of misuse or mismanagement of the money that they receive from the public. Also, the state and local and other recipients are expected to post their awarding funds on websites as well. So it's really using the power of technology here to make this whole process much more transparent and accountable. What that also means is there's more accountability earlier in the process than there ever has been before. Usually contracts are let, grants are let, months go by before they're reported back on whether or not they've achieved the purposes or not. this allows people to ask questions earlier, and it puts more responsibility on we at the GAO and these other auditors, also at the state and local level, in order to carry out their responsibilities and try to help prevent problems before they occur, and not just go in after the fact and document problems. We have a number of responsibilities that have been assigned to us under this legislation. We are required to do bi-monthly reviews of selected states and localities' use of the Recovery Act funds and provide regular reports back to the Congress. We also are required to review the recipient reports. Every recipient who receives money has to file a quarterly report showing how they use the money, what it's resulted in, and how many jobs have been preserved or created. This is going to require a lot of further discussion on the reporting requirements, but we are charged with reviewing those reports and providing analysis back to the Congress. We also have been charged with reviewing some specific areas. Trade adjustment assistance, for example, programs provided assistance to people who've lost their jobs due to manufacturing jobs moving overseas. That's been extended now to people in the service industries and even public employees, so we'll be monitoring that program. There are also new programs in the education area to provide more incentive grants to states and localities. A lot of this money is in the education area. And there's also changes that were put in place in the small business area to help increase the liquidity in the secondary market for small business lending. So we've been charged with looking at what the Small Business Administration is doing to carry out the mandates under the legislation. I'll also mention one other unique responsibility we were given to GAO. I was asked to name 13 members of a health information technology policy group that will be providing advice to the Secretary of Health and Human Services at the federal level, and had to do that within 45 days, which was last Friday, so we announced the members of this group. There's a lot of funding in the bill focused on using technology to provide and modernize medical records and information available with the ultimate objective of trying to improve the quality of care by modernizing healthcare records and bringing technology more to bear to help both improve quality but also reduce costs in the healthcare system. And this committee is intended to provide advice for doing that going forward. In order to carry out our bi-monthly reviews at states and localities, we selected 16 states and the District of Columbia as a core group of organizations and entities that we're going to look at over the next couple of years to do a longitudinal study of the impact of the stimulus bill in these areas. Most of these are large states. The 16 states and the district will receive over 2/3, or about 2/3 of the amount of money that will be spent at the state and local government level. So we'll capture a great deal of the funds. We've, in addition to looking at the amount of money in the population, we've also looked at poverty rates and unemployment rates and finalizing our selection as well. Our first report's due this month. Will be later this month, and you'll also probably hear of us testifying before the Congress on a regular basis on this program, as we've done on the Child Asset Relief program as well. Let me move briefly to the transition. Now, as I mentioned, we provide support to the Congress. So as every new Congress gets created every 2 years, we work with them to help in setting their agendas for that year, for legislation, for oversight, etc. And we work with the committees all the time to do strategic planning. We give them our advice on what areas we think they should look at. They tell us what they would like to focus on, and so we then work together. We receive about 1,200 requests a year from the Congress, and so we do work across the spectrum of federal government activities. Now, during a presidential election year, however, there's the Presidential Transition Act that provides funding and support to president-elects right after the November election to help them get organized so that they can hit the ground running by the time they're inaugurated on January 20th. And so in that legislation, amendments were made in 2000 that recognized the GAO as a source that new administrations were encouraged to go to learn about the management challenges and risks that they were inheriting in making the leap from campaigning to governing. Now, given the wide range of situations this past year, and we felt it was very, very important for us to be proactive. So we took all the hundreds of reports that we've worked on over the years and distilled that information down to some really critical issues that we thought needed attention by the incoming administration. And 2 days after the November election, on November 6th, we unveiled this website. As soon as the President-elect was designated, I sent letters to President-elect Obama and Vice President-elect Joe Biden, and we provided this through the transition teams to do that. And what the website looks like, there's two features here. If you go to the GAO website, which is www.gao.gov, this is the home page. You'll see what's circled here is a new website we have on oversight of the Recovery Act, and I'll show you that home page in a minute. Right below there, the red box in the upper right-hand corner of the slide says 2009 Congressional and Presidential Transition. If you click on there, you go to our special transition website. This is the GAO's website that you'll be able to monitor on the work that we're doing on the stimulus bill. It's got some videos embedded in it, other material, but all our reports as they're issued will be posted and available to the public immediately. There's also a connection down here to connect to the recovery.gov worksite as well. But the transition website has several features. One are a set of urgent issues that we thought the President-elect needed to focus on from day one, right after the election. I'll highlight a few of those for you in a minute. Then we have an agency by agency. So if you want to know what we think the big issues were at the Department of Education, or the Department of Defense, or any of these 28 departments and agencies, you can go to that feature of the website. You'll get our advice in a very short order. What are the critical issues? What do we think needs to be done in bullet form? And then there's links to the GAO more detailed reports so that people could go there and study it as in-depth as they could. And this was also to make it available to them in a form that they can go to any time that they need it. We have provided some of this assistance in the past on an in-person basis, but it's too difficult. So this really empowered a lot of people a lot quicker with the information. We have management challenges across the government. We highlighted 50 opportunities to save billions of dollars through implementing some of our recommendations that weren't implemented yet. We talked about upcoming reports we're going to have on the need to have comprehensive energy plan for our country, issues associated with climate change, and other things as well. That's the upcoming reports on major issues. And then we have a special section on the long-term fiscal outlook of the federal government, which I'll talk about in a second. But some of the urgent issues that we focused on, in addition to the financial markets and institution situation, that was sort of right up there with the top issues, obviously, was U.S. efforts in Iraq, Afghanistan, and Pakistan. Over the past few years, we've issued over 150 reports looking at the U.S. efforts in these areas. And one common theme was the need to have more integrated, updated strategies that really focused on using all the elements of national power, in addition to the military, to deal with many of these issues. And indeed, those policies are under revision now by the new administration. We also had a number of other areas here. I'm not going to go through them all, but you could go to the website if you wanted to find out what we mentioned in a number of these areas. The two I mentioned here was U.S. image abroad. So it's very important to have a more comprehensive strategy, and also the hiring. And and make sure we have enough people with language skills necessary to communicate messages. And the underlying causes of terrorism throughout the world are rooted in some of the views of the United States and also poverty conditions. And so there needs to be a longer-term strategy to deal with some of these issues. Now, I'll mention digital television transition only because I took a lot of grief from my even people within GAO and some of the media. So you have the financial market turmoil, wars, and digital television on the list. And the reason, this is my reason, the transition, which was to free up spectrum for public safety purposes, was supposed to be occurring on February the 17th, 2009. So, and we had issued many reports saying that people weren't ready for that transition. Believe it or not, I know many of you have cable or satellite services, but there are over 14 million households in the United States that still use rabbit. And so, unless they had purchased a special converter coupon or obtained one from the federal government to convert the digital to analog, their televisions would go completely blank on February 17, 2009. Now, I was thinking, if I was the new president, less than a month into my new administration, what I want, and these are some of the most vulnerable populations we have in the country, them to be without communication, particularly during the winter month. So we suggested it be re-examined. Indeed, the new administration asked the Congress to extend the deadline. The deadline, new deadline is now in January. Hopefully things will be in much better shape there. Now I'll end with this section quickly, so open up for questions. Understandably, right now, we need to focus on the financial institutions and stability in our banking system. Understandably, there's a need to address the economic downturn, but there's a long-term structural problem that was there before. It's going to be there once these issues are dealt with and get back on better traction and firm footing from an economic standpoint. But these are very significant issues. And our message has been we need to quickly turn to, with the same level of intensity that we focused on the financial institutions and our economic situation, to dealing with this long-term structural problem for the federal government. And here's what I mean. This is, since 1992, we've done long-range simulations of what federal policy, fiscal policy would look like absent any policy changes. This is our latest simulation that we did about the pattern of deficits in the federal government if we continue on the same path going forward. Now, this is before the stimulus package. We've not yet cranked in and updated the estimates from the Congressional Budget Office and others into this. So this is an optimistic picture, if you will. The solid line is the federal government's deficit patterns, which are rather ominous over a period of time. The other concern that we have is the states collectively are under a lot of financial strain as well. So we built into our model what the aggregate situation would look like across all 50 states as well. And so if you look at the dotted line is the trajectory. If you look at the federal government and the collective fiscal position of the states going out into the future under current policy. And you can see that the states collectively are on the same path that the federal government is on. And so we have a situation where a number of our government institutions are going to be under, fiscal situations are going to be under strain for the foreseeable future. So this needs attention. Now, one of the biggest drivers in this whole area is healthcare. Healthcare costs are the fastest growing part of the federal government's budget. Here you see the red is the Medicare program, which provides federal expenditures to people over 65 and older. Medicaid is the program that the federal government provides a share of the funding along with states to low-income people who can't afford health care on their own. So this is the growth just in the federal government spending on health care, but you can look at the state share of Medicaid, you see the same trend going forward. In fact, as shown in this chart, healthcare spending in our country has grown, more than double the annual rate of growth of our economy over the past few years, and the average rate of growth has been 4.7% compared to 2.2%, and so it's really outpaced. Right now, we're spending about more than 16% of our gross domestic product on healthcare. We spend more than any other industrialized country in the world, but we don't have the #1 quality ratings to show for it as well. So this is an area that is in need of reform. This is on our transition website. If you want to learn more about what we're doing in the healthcare area, you can go to this the website for the Health and Human Services Department. The woman in charge of this is a medical doctor. She's a pediatrician by training. She also has worked in the insurance area. She worked for the Center of Medicaid Studies. Very, very knowledgeable person. We're very fortunate to have her. She's also been a researcher at Johns Hopkins and other places. This lists all the areas that we work on. In addition to food safety, which we had on our high-risk list before, we just added the oversight of protecting the public health and safety of medical devices. This includes pharmaceuticals and pacemakers and other things. More and more, it's been estimated that 80% of the ingredients for all our prescription drugs come from foreign sources. And we found that the Food and Drug Administration had not changed its pattern of inspections, and indeed didn't even have accurate information on all the foreign manufacturing plants, both for drugs as well as medical devices. In the case of pharmaceuticals, they were only on a path that they could get to these manufacturers once every 13 years. So they really need to be changed. But this is what's happening because of globalization. You have, and I could rattle off half a dozen federal entities that were set up and organized at a time when we were producing more things domestically and what's happening now, and they haven't adjusted their staffing, resource levels, and approaches in order to compensate for the changes. So we keep elevating these issues for attention and transformation in order to make sure they're aligned for 21st century challenges. Social Security is another program. While healthcare is by far the largest challenge, the Social Security system is in need of reform as well. It's such a critical part of the financial stability for elderly citizens now that are receiving it. In fact, about 14% of couples that are retired, the only source of income they have is Social Security. And for single elderly people, it's about 30% of them as well. You can see that the amount of people here in this chart relying on savings, pensions, and earnings is far fewer numbers, and of course those people have been susceptible to some of the changes in economic downturn as well. But the long-range projections here show a cash deficit. Now what this means is this system was supposed to be self-supporting over time. Payroll taxes were being collected from working people in this country to provide the benefits and the payments to people for Social Security that were elderly. Well, when we first set up the Social Security system, there were about 13 people working for every one retired person in the country. Right now, it's about 3.2 people working for every one retired people in the country. By 2025, it's estimated to be 2 people working for every one retired person in the country. So the base of payroll taxes compared to the benefits, as the baby boom generation hits the peak retirement period over the next few years here, the amount of payroll taxes being collected, which has been in excess of the payments to Social Security recipients for many years now since the system was last reformed, will go away. And the payments will have to exceed that amount of money. The federal government's been using that excess of payroll taxes over the the Social Security benefits to offset borrowing costs to fund the operations of the federal government and providing Treasury securities for the Social Security Trust Fund. All those will have to be redeemed, and right now the path that we're on, the latest estimate, of course this is before the most recent economic situation by the trustees of the system, shows that the trust fund would be exhausted by 2041. Now, the idea is that might seem a long way away, but if you want to make changes, and we've studied how other countries have dealt with this issue, not the only one with an aging population, it takes a long time to phase in transitions to have people adjust their behavior as a result of it and be prepared. So our feeling is that this is an issue that's in need of discussion. So the entitlement programs and all these programs, Social Security, Medicaid, Medicare, they're like what's called entitlement programs. And what that means, unless the law is changed on who's eligible and how much they're eligible to receive, that money gets paid no matter what. And actually, when Congress, you hear the Congress voting on the budget for the year, the annual appropriation bills for the Congress, that's just on the discretionary side of the budget. These other things that are set by law are mandated and are paid. This is just another way to look at the situation. If you hold revenues at the federal government constant about what they've been for the last 40 years, which is about 18.3% of gross domestic product, and if you look at what these federal government programs would look like over a period of time, absent reform in health care and Social Security, by 2030, there'd be enough revenue to pay the net interest on the debt, which is the blue bar there at the bottom. Green is the Social Security payment, so we'd be okay there, but we wouldn't have enough to fund Medicare or Medicaid, and the beige portion at the top is all the rest of the federal government, defense, transportation, EPA, etc. So this gives, we do these simulations, and again, they're not projections. We won't get to this point, but there'll have to be an intervention. Our point of raising these issues is to point out the magnitude of the issue, to try to make sure that interventions are taken early and there's proper transitions over a period of time. But when you hear people say the federal government needs to get on a prudent, sustainable, long-term fiscal path, this is what they're talking about. There's also a wide range of tax issues, and I'll open up for questions. Right now, there's $290 billion net taxes that are supposed to be paid under the current system that aren't being paid. So there's a need to try to address that. We've made many recommendations in that area. There are lots of tax expenditures. In any one year, the amount of revenue foregone by the federal government to provide incentives to people through tax expenditures exceeds the total amount of money spent in discretionary spending. A huge amount of money, typically off the radar screen, isn't reviewed on a regular basis. We're saying it should be. And then there's the issue of tax simplification that I think you'll hear a lot more about going forward. But with that, I want to make sure I'm leaving the line for questions. Let me just open it up for questions. Yes?
You were talking about the entities that receive funds and they have to report back to you on a monthly or bi-monthly basis?
Not to us, but
They have to report back. What if they don't report back? Do they take the money away from them? What happens?
Well, so far, everybody has been asked to report and has been reporting. What we've suggested, there is a regular reporting system that the financial regulators have for these financial institutions. And it comes every quarter, called call report data. It's audited and it is reviewed by the regulators. So it's a pretty reliable information. We're asking them to collect a subset of that information earlier. So for every institution, they'll at least have quarterly information that the regulators are going to look at. We're saying that Treasury ought to collect the information on a monthly basis so they know whether the banks are increasing their total amount of lending or not, particularly as they pursue some of these other programs. So we haven't got to the point yet where somebody's not reporting, but I don't think that's going to be a problem. In fact, there's a special inspector general for the Troubled Asset Relief Program as well that legislation created, and he sent out a a questionnaire to over 300 institutions that had received money a couple months ago, and he received 100% response back. So I'm encouraged, and I don't think it'll be a problem. Yes?
Last week, FASB adjusted the mark-to-market rules for banks. Can you give us an overview of that and what you think the impact of the changes will be?
Yeah, well, I think, they retained the concept of fair value accounting, and it's given more flexibility in situations where there's not an active market. A lot's going to depend on, they haven't finalized that yet, they're still taking comments, and a lot's going to depend on how it's going to be implemented by the institutions, the auditors, and looked at. So I think it was, it's always reasonable if you have good principles-based accounting practices to give some flexibility. Certainly one has to go through time, but a lot of it depends on how that flexibility is used and really how it's going to be implemented going forward. Yeah.
Didn't the GAO, didn't they shrug some red flags to the Congress originally about the financial institutions before the economic turmoil that took place recently? And did they react? Obviously, they didn't react to them.
That part's true.
Can you explain what those red flags were?
Sure. Actually, we issued a report in 1994 that talked about the risk as we saw it at that time for derivatives. Then we also later issued a report in 2004 and another one in 2007 talking about what we thought was the need to reform the financial regulatory system. And then we used that, we updated it a lot for the information I showed in the report we issued in January 2009. Part of the issue is getting the attention of people before things become, so severe that it's very clear that action needs to be taken. A lot of the events that have happened over the past year just underscored and provided ample evidence of that. But there's a number of areas where, we raised issues, and in some cases there's a debate. It's not that people don't know about it, but then there's a decision made, to go forward. And I think the financial regulators in this particular case thought that things were more in hand, and ultimately with improved debate. So part of one of our responsibilities is to try to address these emerging issues before they happen. But we also need to make sure we have enough resources at the GAO to deal with the current issues, but then try to look ahead at some of the other issues and to provide those warnings to the Congress, but then to try to follow through with them on that. That's one of the reasons we started this effort, looking at modernizing the financial system well ahead of some of the most severe impacts that have occurred. So we were ready. I've already testified at least 3 times, and I can call off my head, before the Congress to help get them started to look at modernizing the system. Yes?
Yeah, does the GAO provide oversight for the PBGC? Is there any relationship between you and them?
Yes. We, they're in the Department of Labor. They're a guarantee operation. In fact, there's such a close relationship. They're on our high-risk list we keep for Congress because of some of their potential risk of exposure going forward. So yes, we do.
With the several $billions that have been spent with the stimulus bill and the bailout, your office has done a good job telling us how that money's being spent. But can you tell us where the money's coming from?
Well, it's being borrowed. It's being borrowed. The short-term Treasury, borrows the money that's needed on a cash basis to be able to provide funding. Most of it, or a large part of it's coming from short-term cash management bills that Treasury has been